All right, can you guys see me?
Can't hear you.
You guys can't see me.
Dude, that name is majestic.
All right, can you guys see me?
We can't hear you.
You can't hear me?
Can't hear you.
Okay, let me see here. 1 second. Bro, this chat. Okay.
We
Turn your
can't
mic
hear
on.
you.
Test, 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 test.
That's
All right, can you guys hear me now? You guys hear me now?
Give us a little moan.
Can you guys hear me or not?
Yeah.
All right,
yeah,
for sure.
so
All right,
he
we'll
finna
begin.
start twerking.
Yeah, yeah. All right, so the reason why I turned on the camera is a lot of people are better learning if you actually see something considered to just hearing something. And I learned the best way people learn because of my own learning experience. I'm taking how I learn best and applying it to everyone here. I've been trading for 4 years now, and I'm gonna just give you a little backstory on how I got to where I'm at. A lot of people here already know me. A lot of people here don't know me, but I've been trading for about 4 years now. I started with the whole GameStop AMC thing. I really didn't know what the fuck I was doing with Bitcoin. When the whole pump happened, and I saw that there was actually money involved in this whole industry, and that's what got me interested in it, and that's why I decided to actually take it seriously and learn from it. But yeah, so after that, I just messed around, didn't know what the hell I was really doing, and I really never had a set strategy, a full on out strategy that I back tested and made sure that worked until this year. Even when the whole NRM thing was going on, a lot of you were part of that. I didn't have a set in stone strategy. It was mainly just trading off certain things, but there was no real strategy involved. And now I'm to the point where I believe I have found a strategy with an edge, and I'm to the point where I believe I can teach all of you guys into becoming profitable traders. And I did not just magically learn this strategy. I actually was taught this strategy by my mentor. A lot of people on the server actually don't know that, like, I have a mentor in the server. He's in the server. He just never really talks. He's a mysterious guy. He's like, no one knows him. No one even knows him. Like, one person knows him, but he's a really profitable trader. No, it's not Inky. It's not Gabe. Like, none of you guys have ever talked to him. Like, I don't. The way I met him was when I turned $100 into 45K. He saw that, and he basically saw potential. He was like, "Oh, this guy kind of knows what he's doing," and then he invited me to a server, and then I talked to him. Slowly became friends with him, and I've been knowing him for like 3 years now. And then he taught me. He taught me everything, and I mean, this dude is no joke, top three prop firm trader in the whole world. Like, this guy has secured millions in payouts with proof. He is probably the reason why TFT shut down. Believe it or not, he was owed a 400K payout. And the thing is, his name is nowhere on paper because he tells all these firms to not put his name out there because he, like I said, he's a private person. He's a mysterious dude, man. He's a mysterious dude. Like, he doesn't want no one to know he's successful, but he's one of the most successful people I personally know. But he's the guy that taught me the strategy. So I did not magically learn the strategy. I don't want to take credit for it, but he's the person that taught me the strategy. And I added my own stuff to the strategy. It's not one strategy. It's a reactive strategy. It's, you got to react with how the market moves. It's not one thing like where you have to wait for a specific pattern or something to show up on your screen. It's a way of trading. I don't know how to explain it. You guys will see when I pull up the charts. All right, let's see what the chat's saying. He's gonna flex on half. Nope, I don't want anyone to know. Insane plus 1,000 aura. We're gonna start shutting prop firms next. Yep. All right, and yeah, Ado and me, we had just got funded with Surge, and they shut down. That's a big issue in the prop industry, which sucks. Firms can shut down at any time. We had just funded a 250K account that was 2K, and it took time to fund that account, but it just went to waste. But that's the thing we risk with prop firms. All right, enough yapping about the strategy. First things first, I'm gonna need all of y'all to get one of these: pen and paper, sticky note, um, notes, whatever, something to write down on, just something to write with. Let me know. Everyone, just like send an emoji when y'all are ready, and we can continue.
Where you post the notes?
No, I'm not taking notes. Just you guys are the ones that are writing notes down. You guys are the ones that are writing notes down. That's another issue. So a lot of people, they always text me, "Oh, can you teach me how to trade? Oh, can you do this, that?" And when the time comes, they don't even show up to the meeting. Like right now, how many of y'all are in here? There's about like less than 16, I believe. So you guys are already ahead of the competition. Because since you guys showed up to here, I have a better chance of actually helping you. You guys will take a step above the people who text me compared to you guys. I will want to help you guys before I help the other people because you guys are actually taking the time. And that's the thing. A lot of people just they want the money, but they don't want to put in the work. And that's not how it works, sadly. So if everyone's ready to write down, let me know. Just send an emoji in the chat. And I want you guys to understand why I'm doing this class to even begin with, you know? So if we go to the Discord channel and you look at all the plays I called out in the legit past 3 months, like all of them were winning trades, right? But how many people actually made money from it? How many people actually made money from it? I guarantee you like maybe 2 people made money from it. And that's not a sustainable way to make money. Copy trading other people is not a sustainable way. You even if I tell you what to do every day, you guys will probably not end up profitable just from the fact that you won't get the exact entries, you won't get the exact exits. It's impossible because the market moves too quick. By the time I'm done typing it, something could have jumped 20 points, something could have jumped 10 points, and it's a big deal. So that's why the whole purpose of this is to actually teach you guys instead of you guys just leeching off. And that I don't care if you guys were to just copy my trades. I do not mind. It does not affect me. If you take the same trade as me, it does not affect me. It won't make the trade go bad. It won't make it go good. It makes no difference. But me actually teaching you guys allows you guys the chance, the opportunity to be able to find these trades, take these trades without me. What if one day I magically just stopped using Discord? You guys would all be fucked. If you guys had been depending on me to take trades and I'd suddenly disappear. And that's what kind of happened if you guys realize nobody's active in NRM anymore. And I kind of did that on purpose. Because the second I stopped being active, everyone stopped being active. Everyone. Like legit, the last message was probably like a month ago or it was me. But that's how you find the people that actually want to learn and the people that are just there for strictly money. And I texted everyone that was active in NRM and told them, oh, I'm going to be doing this lesson. And only some people were interested because some people just wanted the quick money. And that was the downfall of NRM. Honestly, it was the people were just copying trades. They weren't learning. They just wanted quick money. And I didn't like the route it was going. So I'm resurfacing the whole thing and you guys are going to be the start of it, because the reason behind this is right now we have about 16 people in the stream. If I can make all 16 of you profitable, which I know I can, you guys are all going to be active. You're making money. You guys are going to be active in the server. You're going to refer friends. You're going to tell them this thing actually works. And third of all, when people ask questions, when people say things in the server, you guys are going to have a response. I'm going to have people that know what they're doing inside the server. Previously, nobody in the server really knew what they were doing. But now I'm going to have a group of people inside the server that trade exactly like me and know what they're doing. And so speaking of trading like me, there is not one good strategy, by the way, guys. This is not the strategy. And what I mean by that is there's not one right way to trade. Some of you guys might trade ICT. What was that one dude saying? Fair value gaps. Like this stuff, I've never looked into it. I have no idea what it is. I have no way of these. I have no idea of these strategies. I don't even know what they are. But I know my strategy works, and that's the strategy I'm going to be teaching you guys. I'm not forcing you guys to use this strategy. It's just my personal experience, and I'm allowing you guys to learn this strategy. So if you guys don't like the strategy, you don't have to use it. There's many profitable strategies, but this is the one that's worked for me personally, and this is the one that has gotten me consistent payouts. And the reason why I decided to finally do this is I would always tell people, and there was this one guy that would piss me off. His name was Tree Hunter. He would always be like, oh, why are you guys taking so long to post plays? Why are you guys not having the Discord active? And I would always tell him, me and Inky still tells him to this day, we were like, we're waiting till we know we can consistently make everyone money. That's when we will start being active. Like this guy was like, he was just like leeching. He just wanted money. Like it was bad. And I would always tell him, we're not ready yet. We're not going to force plays upon people. We're not going to do things when we know it's not 100%. And I started using the strategy consistently since like 2 years now, and it took me 2 years to fully master it. And I learned a lot of things that will help you guys learn it quicker. It doesn't, just because it took me 2 years does not mean it's going to take you guys 2 years. Realistically, if you put in the time and effort, you can learn it consistently in a month. He was so impatient. Yes, this bro was like, dude, it was bad. And the funny thing is, he saw me get payouts inside the My Funded Futures server, and he like reacted to the message, which is funny. It's just like, it's kind of, irony. Like, it at the end, it all adds up. But enough yapping. Yeah, see, he sent the fucking talking to a brick. That's how I feel like right now. But I kind of want you guys to understand why I'm doing this in the first place, what my goals with this whole call is. I wouldn't be doing this, and there's a reason why I allow you guys to pay me after you actually make money, considering some people, they force you to pay money up front. Some people can't do that. They don't have the money, they don't have the funds to do that. I can guarantee you guys to make money as long as you stay consistent, and that's why I allow you guys to pay after you actually receive a payout. And the copy trading thing, for example, Ado's a profitable trader now, and I've texted him every single play to take, when to enter, when to exit on iMessage. And the reason why that works compared to why the Discord didn't work is I consistently called him, texted him, ASAP. But that is not sustainable long term, and it's finally time for everyone to learn the actual strategy. And this is gonna be the strategy. Hold on, let me put up the charts real quick. Let me get trading view up here. All right. Is there a way I could keep my? Let's see. Can I share my screen? All right. Now we're to the charts. All right, chat. Can you guys see the chart? Can you guys see the chart? Before I show you the strategy, I'm gonna pay Discord for 14. All right. Let me know if you guys can see the charts. Yep. All right. And this. All right. Okay. The chart's right here. Let me know if you guys can see it. How many people can actually read the chart? Where's the chart? All right. So you guys are able to see it, right? If you can, just turn on mic, just say yeah or something of that sort. I can't a bit. Where's the chart for real? You guys can't see it? Maybe I gotta end the camera. Okay, let me turn off the camera. Okay. Let me double check this shit's recording. Yep, 15 minutes. We've been yapping for 15 whole minutes. Okay. Now we are on the charts. Just want to make sure everyone can see it. Y'all have to click watch stream. Yeah, okay, click watch stream so you guys can see it. Yeah, but it's more than support and resistance coming into with an empty head to absorb new shit. Alright, let me know if you guys can see the chart. Some people are saying yes, some people are saying no, so I can't really tell. Yes, okay. Alright. So, before we dive deep into it, you guys can see my screen. And this is actually this is my chart. There we go. Okay. So you guys can see my screen here. Watch stream where? Yes sir, never mind. See, thank you. Okay. So make sure you guys have your pen and your pad or your notes open, because you guys are gonna have a lot to write down here, guys. And I don't expect you guys to get everything down right away, but we'll start. It's a lot. Okay. Alright. So first things first, this is a brief breakdown of the strategy of what I use. So we'll use, this is gold. So first things first, we have our RSI with Bollinger Bands with median. That's what this is down here. And then we have two lines on our actual chart. We have this purple and this blue line. The blue line is VWAP. It's the volume weighted average. It's the average price of the stock for the day. This purple line is trauma. It's a Lux algo. It takes the higher highs, lower lows, higher lows, lower highs, and puts it into one price. And every time frame is different for trauma. And our third thing we have are our supply and demand levels. Purple being a strong one, white being a smaller one. Then our third fellow is trend lines. Let's see. Trend lines. Trend line. Do we got any more previous trend lines on this chart? Let's see. Trend line. Alright, so those are the major components of the strategy. So I want you guys to write purple meaning higher time frame. Purple just means a bigger. It means it's been supported more times. It's a big level where you should be paying attention to, where a big move could happen. So that's the base. These are the things inside the strategy that we use. And now I'm gonna show you guys how to use it and how to properly use it. So first things first, everything is a lot easier right now because the chart is not moving. Everything is different when it comes to lifetime price action. Right now, yeah, you can spot things and it'll be easy to spot things because the chart isn't moving. It already happened. You can say, oh yeah, there was a trend line right here and it broke out. But in live time, this trend line could keep falling down. It could just make a new low. It's a lot different when it's live action. So that's why we're gonna do more classes and we're gonna do live trading as well, so you guys can spot these things live as well. Because this is nothing compared to real time action when this stuff is happening live. Because anyone can go on this chart and tell you, oh yeah, it would have went up here because it already happened. But in live time action, it's a lot different. So we'll begin with supply and demand. So I already have a separate video on how to map levels. It's pretty easy. So I'm gonna clear this chart and do it live here for you. So remove 37 drawings. Okay. So now we have a fresh chart. It has no levels, nothing. It could be called level, support, resistance, whatever you want to call it. Right now it's a blank chart. We have no levels. So the way you find your levels is you go to the bigger time frame picture first. So we'll go to the 3-month chart. And since we are at all-time highs, it is kind of difficult. All-time highs are the hardest times to trade. So these are previous 3-month candles that have closed. So what we're gonna do, and this is what I do every week, every Sunday, I delete every line off my chart and I reset. So we're gonna grab the top of this wick and we're gonna make it purple. Why did we just do that? Because this was a price point where price action touched and then rejected. Even though it did not close here, it still wicked it. The difference between a wick and a close is this. So if we take a look at this candle right here, price action in this month went all the way to 16K, but it didn't close there. It touched it, but by the end of the month, it came back down to 15,343. And the bottom wick was 14,500. And this matters because even though price doesn't close there, it still touches it. So we'll grab the top of the wick, we'll grab the bottom or top of the candle, bottom of the candle, and bottom of the wick. And these 4 support and resistance came from just this candle alone. So then we'll go to the previous monthly candle, and we only do this for the past 3 candles. I'm not considering this one a candle because it still hasn't closed yet. It still has room up or down. So I'm taking the previous 3 closed candles. So we'll grab the bottom of this wick, the bottom of this candle, and the top of this wick. And you can just click Alt H on your keyboard if you're using
computer and it'll automatically draw lines. And it's just a repetitive process. It's pretty simple. People make it a lot more complex than it should be. So right there alone, we got our major key levels here. And if we go to the monthly chart now, you can see these lines kind of already fall into perfectly with the monthly charts. But then we'll repeat the process here. Grab the top of this wick. This, you guys see how this is already filled in? Like, I don't have to do anything because with the 3-month chart, the levels are still respected to this day. Trading is just gathering data and making a guess off previous data. That's legit what it is. So we got there, and that wick is considered part of that, so we'll leave that as that. And now we got our levels for the monthly chart. Now we go to our weekly, and this is a boring process, but you got to do it every week so you can have your fresh levels. The weekly is the ones that are interchanging every week. Oh, hold up, I'm getting a phone call. Alright, so you can see the weekly chart already kind of falls in, but we get the past three, this one, this one, this one. We get the bottom wick of this candle, top wick of this candle, and right there, the bottom of those two candles, top of this candle. And now we go to the daily. And the daily is typically where I'll change to white lines. And yeah, from a far distance, it looks like a lot of levels, but when you really look at it, it really isn't. This level to this level is almost 800 points. This level to this level is almost 100. This one's almost 200. 100 points right here, 200 points. These are big levels. It just looks clumped up because I'm on the bigger time frame. But when we come to the 15-minute chart and we actually zoom it out, these levels start looking more reasonable. It starts making more sense. It's all about perspective here. So we're going to go back to daily and continue mapping our chart. Okay, is it going to load? Where did my chart go? It's down here. Okay. So now we're going to come down to daily, zoom it out, and we're just going to look for spots where price rejected or bounced multiple times. So right off rip, you can see right here what's the spot. And why I'm mapping this spot right here is because this was a key rejection right here where we fully reversed back down, and then when we finally broke above this level again, you can see we got our next leg up. So I could even put this as a key level, but so that's another level right here. We got the bottom here. Let's see any levels we potentially missed. And then so daily looks good for now. It looks like we got everything down. So now we go to our 4-hour chart. And we keep repeating the process. We don't have much data since these are new highs. It is really hard to trade new highs because it's hard to map levels because you haven't had previous price action to determine things. But you can see we touched the spot twice and bounced. We double bottomed off this. We already got a level off this breakout right here. And then this was our next breakout right there. We wicked this spot. You would technically put a level here, but it's only been touched once. So it's kind of hard to map all-time highs. It is the hardest time to trade right now. And then we double topped up here, so we'll put a level there. And looks like we should be done charting NASDAQ for now. There's also a lot of micro levels where I could put stuff. I could literally put a level right here if I wanted to. I could put a level right here if I wanted to, right about. That would be a tricky one. I'll leave this blank area because we wicked it twice. It bounced. This is spot. Topped out twice here. Topped out right there and right here. Rejected this spot, and this was the dump. And that's how you just map your levels. And these levels are key. These levels are they're a big part of the strategy. You got to do this every week. If not, the strategy will not work. So let me go back to Discord. Okay, let's see any messages here. Yo, Christy, when you get into example trades, can you go over complements, things you want to see? Yep. Yep, comment. I will be doing that. Technically, can you apply this charting to any ticker? Only works with index fund. So we are looking at the 3 month, 1 week, the daily, and the 4 hours to map out. Yes, so 3 month, 1 week, daily, 4 hour. And make sure you guys write this down. Every time, it's the same process over and over again. It's a consistent process. Nothing changed. And this does work for every ticker. It's just not indexes. This is how I chart Tesla, gold, NASDAQ, NVIDIA, AMD, any stock you want to look at. It's the same way. Because these candle closes tell you the story. They tell you everything. They tell you where price rejected and where price didn't reject, and where price closed and where price didn't close.
When you're mapping it out, or I think I missed this, I don't know if I did or not. Are you just mapping out the 3 like most recent like highs and lows? Is that what it is?
So for the bigger time frames, the
Yeah.
the monthly, yeah. So you just grab the close. So for all the people that don't know how a candle works, let me explain it so it kind of makes more sense. So this is the candle itself. This is the bottom wick of the candle. This is the top wick of the candle. This is where the candle opened, and this is where the candle closed. And this is a red candle. The blue sticks on my chart are green candles. White sticks are red candles. And this is where we closed. So you'd map one at the wick, at the bottom candle, at the top candle, and the top wick. Because all 4 points of that candle are important. They all mean something. It all means where price opened, where price closed, where price went the highest, and where price went the lowest. So all these price points are important inside the candle. All right, does everyone understand that part of... This is just mapping it. I'm not explaining how it actually works yet. That's just mapping it. Does everyone understand how to map support and resistance? If everyone can just react with a 1 if you understand, and a 2 if you guys have questions about it. Because if you guys have questions about it, more than likely another person has the same question. All right. Okay, so seems like most people understand it. And to give an example of it now. Okay, somebody in chat just type a random day of the market. A random day of the market. Give me a random date. It could be April, May, June, any day. Any day. So you said map bottom wick, top wick, bottom candle, and top of the candle. Yes, that is correct. Okay, 9/2/24, bro. That hasn't even happened yet. Just to confirm, 3 month, 1 week, daily, and 4 hour. There's also the monthly. Don't forget the monthly. So 3 month, 1 week, daily, and 4 hour. And the 15-minute is just too small of a time frame to the point where the levels won't be as respective. Okay, we'll go. It's June 12th. June 12th. That's the most recent day. Let's see. June 12th was. I just want to make sure that's a trading day. Okay, I guess the calendar doesn't want to work. June 12th was a Wednesday. Okay, this should work. Jar Jar Binks? What? Where did Jar Jar Binks come from? Okay, so we'll go to June 12th. Oh wait, I think June 12th was actually... Yeah, June 12th is the worst day to do this because that's the day the contracts flipped. Okay, another day. Because you guys can see the big gap up that happened right here. This was every month contracts on futures, they flip over. And when that happens, there's a big move in the contract price. And you guys see that big gap. It was like a 300-point gap up. But this wasn't a real move. This was just the contracts flipping over. So we can't use June 12th as an example, actually. Okay, when you type J.
Okay, we'll try May 9th, Thursday. We'll see what May 9th was. May 9th was a Thursday. Okay, perfect. I'm gonna travel back in time to May 9th. So May 9th is right here. Okay, perfect. This is a good example right here. Alright. So May 9th began right here. It's Thursday, May 9th. And right off rip, we can see we're trading in a range. You look at the chart right away. You look at this from afar, you can tell two things. We're clearly in an uptrend and we're trading in this range. Okay. And this is where our supply and demand levels come in clutch. You can see when I mapped the levels, I was nowhere near May 9th. And if you look at this perfectly, you can see that we respected these levels quite literally to the T right here. Okay. First example of testing the breakout zone. So we tried testing the breakout zone and we failed. And why did we fail? If you look here, zoom into the price action. Price action is just the way the candles move. We tried breaking above it. We had this big candle. We closed right above it. But we never had continuation. Right when we closed above it, we saw chop. And chop usually means that it's not going to keep going because we never got a confirmed move up. If we would have seen another candle close and we would have closed above this, say this previous high, then that would have been good. But we wicked this level right here at 264. We went up here, wicked it again, and rejected. This would be a clear sign of rejection. And then to top it all off, we made a higher high, but this higher high closed below the resistance. So just off this, not even using the RSI, you can tell this is weak. This is bearish. You would look for a short off this break of this 246. And you can see we would have got a rejection. And then we would have had our continuation down to this, our level down here at 18071. On top of this, the RSI up here, there was bearish divergence. This is where the strategy, this is the extra edge I give you guys, the sauce. So RSI divergences. Write this down. This is the key part of the strategy. On top of that, we had this. Okay, now let me explain the RSI. We're kind of jumping all over the place because this is a perfect example of the strategy. This is a great example, May 9th. A random day. He gave me a random day and you can see the strategy would have worked perfectly on this day. So make sure you guys have your pen and paper. I'll give you guys some time.
The markets are closed.
We're about to write a lot down here. Okay. So down here we have the blue line is RSI. This is RSI. RSI stands for Relative Strength Index, and it shows you how much a stock is oversold or overbought on a scale of 0 to 100. But the way I use it, I do not care about what the RSI is at. I use it in a different way. I use trend lines on the RSI, also known as divergences. I don't care whether it's at 80, whether it's at 10, whether it's at 20, 30, 40. I don't even look at this. I just look like what point the RSI is inside the bands and what trend lines are forming inside the RSI. So from here, we have three lines. We have this being the top of the band, the bottom of the band, and the middle line is called median. So write all this down. The bottom of the band, top of the band, middle line is median. And then the blue line is RSI. It will look different on everyone's chart depending on how you chart your chart. I have my set at these colors, but it could be a different color for you. Okay, so we're kind of jumping all over the place, but the first thing I do when I wake up on a trading day, I usually wake up a little bit before market opens. And I'll always, so we'll come back to this, but
since we're on the topic of RSI, I gotta let you guys know how do we set up the RSI. Is there a certain one? Yes, there is. Okay, to set up the RSI, if you guys want to copy it right now, you type RSI, and then you'd click the settings for the RSI, and then you'd input these settings. You'd put time frame chart with gaps on, RSI length F14, source close, MA type Bollinger Bands, MA length 34, standard deviation at 2, and then you could customize it how it looks there. And I'll send you guys a copy of the link to my chart so you guys could literally copy it. But if you want to do it right now, this is the settings. The indicator will literally just be RSI, and then you input this information on the chart. All right, you guys still alive in here? I know this is pretty a lot of yapping, but okay. So first things I do when I wake up is you go to the bigger time frame pictures, being the 4 hour, the 1 hour, and sometimes the daily. On May 9th, that would have been right. Oh, this is March. Wait, we gotta go all the way to May. Okay, May 9th would be right here. So May 9th would be right here. And right off rip, what I would notice, just looking off the RSI, May 9th, we're above median. We have room up to the top of the band. So you would technically be bullish until we touch the top of the band and then reset. And I'll explain what a reset is. That's gonna be your best friend in this strategy. So the 4 hour would be bullish. You would just notice off rip 4 hours bullish. Then you'd come to your hourly. That's June. We gotta go back to May. And then the 1 hour. This right here was bullish as well. We had bullish divergence forming, and we were hitting the bottom of the band. So you'd be looking for a set of longs right here. All right, so as soon as I woke up on May 9th, I would have been bullish. But you want to take that with with a grain of salt. You don't want to be bullish just because of that. But your mindset should be looking for bullish setups, because the bigger picture for the day is bullish. Okay, we're going back to May 9th to here. Okay, we're back. So we tested price action up here. We tried breaking out. We failed. We had this bearish divergence. Bearish divergence is basically, think of it as a rising wedge. A rising wedge is basically, let me draw it out for you guys. Everything that you can chart up here on this chart alone, you can chart down here on the RSI. So let me get my pen. Okay, can I draw here? Okay, so a rising wedge is basically when price action just slowly goes up after a big move up or down. And you can see an example of this would be like, and this is a falling wedge right here. Let me find an example of a rising wedge. Okay, rising wedge right here. We had a big drop, and then we had a rising wedge. You could draw the trend line right here. As soon as we break the trend line, we get our dump. So this is a rising wedge right here. This is going to be one of your best friends. I take a lot of my trades off price action that forms like this. So this is a rising wedge. Does everyone understand what a rising wedge is? Rising wedge is a big deal. Can everyone just write an emoji or something if you guys understand what a rising wedge is? Just want to make sure you guys are with me. No, you do not understand what a rising wedge is. Okay, perfect. Let me explain it a bit more. So how this rising wedge began was a big impulse move down or up, either way, and then you form this trend line. A trend line is basically a line that is respected multiple times. It has multiple touches. The more touches it has, the more respected it is. Right here you can see 1, 2, 3. 4, 5, 6, 7. 7 touches on the 15 minute. On the 15 minute is a huge deal. When you're trading, the bigger time frame picture will always give you the bigger move. The 15 minute will always give you the bigger move compared to the 5 minute where it could give you a smaller move, but it'll just be a scalp. So you would have seen this off the 15. You would have known that once this cracks and breaks, this thing is dumping. And you can see clearly this would have been a perfect trade because, first of all, you got the trend line. You got the rising wedge. You're hitting the top of the band on the 15 right here. And you're hitting this big resistance zone. So this is the type of trade that I would actually take in real time because it has every confluence known to man. Simus was asking, what confluence do you look for? First of all, we got our trend line. Second of all, we're hitting a resistance point. Third of all, on the RSI, we have bearish divergence and we're hitting the top of the band. So that's 3 confluences. So another one right here. As soon as we break the trend line and we just go straight through VWAP and trauma, you can see we kept the dump going. As soon as you break trauma and VWAP and close under it, you're going to get your next leg down. So you have every confluence known to man on this trade right here. On this, simply started as a rising wedge, and you can see that every confluence slowly lined up to it, and you would have been able to catch this short. I know I did a whole lot of yapping right there, but did that make sense? Kind of as how you would take every confluence. So it's when the price slowly rises after a big move up or down. So it could be after a big move up or down, or it could slowly form when the market is just choppy. It'll slowly form a rising wedge or a falling wedge. Yo.
Can you go over the
You kind of died off over there. Flavor, what were you saying?
I'll show you about. Can you go over the RSI part of the confluence or whatever?
Yeah. Okay. So the RSI part, it's a lot different seeing it because when market is open, RSI is actually moving. It's not stagnant. It's like moving live in real time. So, like I said, it's called a divergence, or that's what I consider it. It's a divergence, and the real definition is it's a point that's touched multiple times, and then what we're playing is the breakdown of the divergence. You can play the touch of the divergence or the breakdown, but the breakdown is where you'll catch your big moves down or up, your reversals. We are technically reversal traders. We are catching tops and bottoms. And a lot of people always ask me, oh, how do you catch the top or the bottom? Because I usually actually always get right around the top or the bottom, and it's because of the RSI. So the divergence itself would be right here. You can see at the start of this trend, this rising wedge right here would be at the bottom of the band. So technically, you could play longs from here, from this bottom of the band all the way up to the top of the band. You would have been able to play longs, but there's no real setup here. The only setup you would have seen was that we're holding trauma, VWAP, and we're at the bottom of the band on the 15. So this, you could take longs off the start of this trend right here, but it wouldn't be a D1 setup. The way you'll stay a consistent trader and make money consistently is if you take the best setups possible. Because yeah, technically you could have went long here, but this setup compared to this setup up here is a lot different. So the divergence starts right here, and you could draw it to up here and play that breakdown, or you could play the bigger breakdown right here. So the way this works is when the RSI touches the bottom of the band, it basically means the market is getting ready to either bounce or have its next leg up. This happens when there's a sell-off or there's a pullback. So you always want to be looking for positions when it's either at the top of the band or the bottom of the band. And when it's at the middle, called median, this is typically where it's either you're gonna get your flush or your pump. This is where short squeezes happen when it approaches median. It's because this is typically the spot where it would bounce or just reject. But when you crack median is a big deal. When you crack median, that's when your big impulse moves happen. So if we come to this rising wedge we were talking about right here and line it up with the RSI, you can see when we went below median, that's when we got our big dump. And then the Bollinger Bands are a big deal as well. So a whole lot of yapping, but okay. So the Bollinger Bands are a big deal. When the Bollinger Bands open up like this,
it means there's more room up or down. You guys can see how they opened up, and right here they were tighter. When the Bollinger Bands are tight, that means a big move is coming, an impulsive move is coming, either up or down. Because it could have easily went the other way right here. It could have squeezed upwards if the band would have started opening up this way, and then price action would have moved up. But it stayed tight, and then price action moved down, and you can see the Bollinger Band open downwards, and the RSI continued down with it. And anytime the RSI is outside the Bollinger Bands, it's considered overextended, and you want to wait for the RSI to come back inside the Bollinger Band to look for your bounce for your longs. When the RSI is down here, you want to look for longs. The RSI is up here, you want to look for shorts. But it's not as simple as that. That's just the basis of the strategy. Because you got to take more things into account, such as the hourly. Because the 15-minute could be telling us that, but the hourly will be telling us different. If we come to the May 9th on the hourly, right here, you can see on this dump right here, the hourly was bullish. This was a reset on the hourly. And what a reset is, write this down. A reset is, this is a big deal of the strategy. This is how you find continuation and you know where the trend is going. A reset is typically when the RSI comes all the way back down to the Bollinger Band, but price stays higher than it previously was. So right here, the RSI topped out and NASDAQ was only at 18,203. And now the RSI kept heading down, 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 all the way back to 18,071. And what that did is it gives NASDAQ more room up now, long term, for the future. Because now your RSI is reset, and now the bullish divergence is forming, and now it has all the room all the way back up to the top of the band. And you can see the next time we topped out on the RSI was right here. And that new high was 18,300. So all the RSI did was reset to go higher, to make price go higher.
Is it almost like the value resets within that like little where it can become overvalued and undervalued again?
Your mic was kind of cutting out. Could you repeat that, please?
Damn, bro, my bad. Is it almost like the valuations becoming back, like it's becoming neutral again, to where
Yeah.
it can't have like an undervalued? Oh, okay, cool.
Basically, yeah. It's like it's resetting the whole the basis of the price action to the point where it's giving it more room up, because now price held here. Okay, let me see what you guys were saying in chat. I'm back. How much did I miss? You can do replays on TradingView too. Yeah, Chris, you back to replay. I'm gonna have to watch the replay in like 0.5 speed. I know it's a lot. That's why there's gonna be multiple classes. This is all new information to you guys, so half of this probably makes absolutely no sense, and that's okay. Okay, so we had our divergences, another play. You would look for longs off this, but we'll come back to the May 9th. May 9th is our guide today. That would have been right here. Okay. So back to May 9th. And you guys can see that this strategy literally worked with the random day he gave me. And I'll let you guys give me another random date and we'll go to that and we'll see what price action was doing. But you guys can see we would have been able to catch this short. We would have been able to catch this short up here. This big dump. And then you can see we had consolidation right here after that dump. And then what if I told you we would have been able to catch this bottom as well? Can someone tell me why we would have went long at this bottom right here? At this 18,071. Why would this have been our next setup right here?
It went below the Bellinger Band.
Yes. So,
Yes.
okay. We have technically three confluences on this trade. We would have been able to catch this bottom literally to the T. Like we would have been able to catch this legit bottom, this wick right here. We would have been able to catch that. And a lot of people always ask me, "Oh, how do I catch the bottom?" If I wouldn't have had this level, I wouldn't have been able to catch this bottom. So first things first, we have a big level here. This was the previous breakout level, so you got to take that into account as well. And I also believe this was the pre-market low, if I'm correct. Let's see. Oh wait, no, that is wrong. Okay, ignore that. Wait, May 8. Oh wait, hold up, chat. We were on May 9th, not May 8th. What the hell happened here? Am I tripping? Was this not what we were just looking at? Yeah, we were. Oh, I guess May 7th? Did he tell me May 7th or May 9th? Oh, May 9th. Okay, I guess I was looking at May 7th. Okay, so this was May 7th, not May 9th, actually. My bad. Okay, so we had the... Wait, is this the right thing? I'm tripping out. Okay, yeah, because the divergence right here. Okay, so this is what we were looking at, right, guys? Just want to double check if this is what we were looking at. Am I tripping, or is this what we were looking at? Too much fat, my bad, yo. Alright, this is what we were looking at though, right? Okay, so yeah, we had a rising wedge. Right here, you can see we cracked the rising wedge. That we're cracking the divergence. We're at the top of the band, top of the resistance. And we get our move down. Okay, and then our next good setup would have been right here. We have our support. We have our bullish divergence forming as well right here. We're at the bottom of the band. And you can see when we hit median is always a big trim. This is where I take my trims. Median is a big trim, and then if we crack median, you get your big move up. You can see when we were hitting median, this was when we were hitting VWAP and trauma, and then when we broke VWAP and trauma, we got our next move up to the top of the resistance. And then we also rejected this resistance again. And then we had a lot of chop right here. But chop is sometimes your friend. Because in this chop right here, this whole area right here, what did we form in this chop right here, guys? Let me know in the chat. What did we form right here? What we got cooking up? What we got brewing up? There's also something right here. Are you mainly trading on the 15 rather than the 5 and 1 minute? So the 1 minute is actually my favorite for scalping, but the 15 tells you the 15 is how you'll catch the big 100-point moves. This is how you'll catch the reversals. This is how you'll catch bottom and tops. I'm gonna go over the 5 minute and 1 minute as well, but for now we're gonna fully go over the 15. So right here we got this. So previously we had a rising wedge. This was the rising wedge. Now there's the opposite of a rising wedge is a falling wedge. It's literally the same thing.
I missed it. What is a wedge?
So a wedge is it's just what it's called. It's not necessarily a thing. It's just what it's known as in the trading like industry. It's basically just like a trend, up or down like this.
Oh, okay.
So you see, this is a rising wedge, and then this is a falling wedge. We would probably map it like right. We would map it like right about there. Maybe even if you wanted to, you could do it this way. This would probably be the better trend. You can see we have a falling wedge trend. And on top of that, we have bullish divergence on the 15. So we have our divergence, breakout of the divergence is the breakout of the wedge as well. You would have been able to catch this move up, which would have been almost 100 points. And these moves, both these moves are like 100 plus points. So you'd be able to catch easy 100 points right here, just off the break of this trend line. And the thing is, you don't have to be in this trade during none of this. When you enter is when it starts to break out. During this, you're just patiently waiting. And that's the issue. Some people try to enter here, and then they have to wait all this time, and then they'll barely end up in profits because they entered right before it fully formed. Because for all we know, this could have kept going and then just dumped. Broke to this level, got your next leg down. But since we broke above this wedge, we got our continuation upwards. And you can see we had our continuation, and then we touched the same level that we've been touching previously. And then I'm going to show you guys an example of how resistance is broken right here, okay? So does this make sense to everyone? Is everyone like staying up to date with wedges, rising wedge, falling wedge. Does that make sense? And divergences. When would you know when to enter? Okay, that's a good question. That's a good question. All right, so we'll go to this one. So when you enter, that's when your smaller time frames come in handy. This is when these smaller time, the 5 minute, the 1 minute come in handy. Previously, we were just looking at the 15, the bigger time frame. But now, for your entries, you want to come down to these smaller time frames. Let me go back to May 7th. Alright, okay, back to the good old rising wedge we had right here. So, on the 5 minute, if you were trading off the 5 minute, the divergence would have been right here. Or even right here. It depends. There's many ways you can trade it. You can trade the breakdown or the breakdown of median. Okay, so your entry on the 5 minute would have been on this break. And you can see you got your continuation. When this 5 minute closed under, we broke the trend. Do you guys see that? Once this 5 minute closed under the trend line. And another sign of confirmation to, oh, this is bearish, is on the next candle we wicked right to the trend line. This happens a lot when we break trend lines. It'll retest the trend line and try to come back above it. But if it fails to do that, that's a sign that price action is weak and will continue downwards. And on the 5 minute, like somebody mentioned it, like you could catch smaller moves off the 5 minute, like right here. We have another falling wedge. You would have been able to catch a small breakout, but that's only 178. That's like 40 points. You would have been able to catch 40 points off this. And there was bullish divergence as well on the 5 minute from this. And then same thing goes. Look, right after that falling wedge, we got a rising wedge. It's literally, the market's a game of wedges. Look, next thing, we have a rising wedge. You would have been able to catch this off trauma, and you would have caught a nice 25-point move. Off the 5 minute, you won't catch the biggest moves, but you'll catch moves. And then next move, we had another falling wedge on the 5 minute with bearish, bullish divergence right here. So this is a setup I would for surely take because of how many times it tested median and failed. This breakout was going to come eventually, and when it did, it was a good breakout. So we got our trend right here. And break out, and then boom, we get our move up. And this with the bullish divergence, this would have been from 180 all the way to 217, 40-point move right there. And would you look at what happens after a rising wedge plays out? A falling wedge starts forming here. And then when we break the falling wedge, we get our next move down. So you could be intraday trading this on the 5 minute and catch every single move almost. Or you could just stick to the bigger time frame picture on the 15. Where the hell did my chart go?
How did you know that it was gonna break out though?
On which time frame? The 5 or the 15?
5 minute.
So this is where kind of watching the market comes in handy. Like I've watched the market so much to the point where you know when the moves are coming. Like let me go back to the price action. Like this will all become second nature to you guys once you guys start doing it. What the hell? Oh, we gotta zoom. Yeah, this shit is annoying. Gotta keep going all the way back here. Okay. What the hell, man? Okay, May 9th right here. Okay. Okay, so on which one? The smaller moves? And this for surely looks like after hour movement because it's pretty choppy. It might have been during normal market. Yeah, this was after hours. So after hours is always a lot more shitty than actual market hours. But so
Okay, so which move are you talking about? This move, or which move, or this move?
The two little ones.
Okay, so we have our falling wedge right here, right?
Mm-hmm.
And then we have our bullish divergence. And you can see we tried breaking out right here, and we failed. The next candle literally took us back under. When failure happens, it typically happens within the next candle. This was literally, people would have got caught on this, and then it would have just kept trending downwards, right? So that's why stop losses are very important when trading. Because look, you enter off the bottom of the band right here on the 5-minute. Your entry would have been right here. You could literally set your stop loss to break even, and if you would have been in profit no matter what here, about 20 points. But it came back rejected and went lower, so you probably would have got stopped out right here. But the bigger time frame picture is still a falling wedge. It just never played out. This was just a rejection, and it finally decides to play out right here. You can see that we break median and close above, and then we get our move up. But these are mainly just scalps.
So what is?
Continue on, my bad.
Go ahead.
Okay, I was
I was gonna ask, what is what does VWAP have to do with anything then?
Okay, VWAP is just I never really take trades off VWAP. VWAP is more of a you're trimming here, you're closing here, or if it breaks through, there's more continuation. I will never take a trade off. Oh, it hit VWAP, I'm gonna short it. Cause like right here, you can see we would have took this falling wedge, right? And then we would have been at the top of the band around trauma right here. So I would already be trimming here. I would be out of most of my position. But if I'm in runners, we continued upwards. We retested the median. We held median. And we touched the top of the band again. And then we touched VWAP. And that's where we fully rejected and got our reset. So that's where VWAP comes in handy. You use it as a trimming point, as a closing point. And that's about it. I don't use it for entries or exits. Just trims and closing positions. And then we had our rising wedge here forming with the bullish divergence on the 5-minute. Right here we had our rising wedge. We break under, we retest it, we fail to go back above it, and then we get our continuation downwards. This is a big continuation. So this is more than likely the 15-minute playing out because this is actual market. If we go back to this on May 9th, right here, May 8th, we get our continuation off the 15-minute break right here. It bottoms down, the bands open up, giving it more room down, and when the RSI finally gets back from being overextended inside the band, that's when we finally decide to bounce. And the crazy part is the market literally gives you time to enter. You see this chop right here? This chop before the big pump up is literally the RSI resetting back into the band for it to go back to the top of the band. So you wouldn't just enter right here off this first wick because the RSI is still outside the band. You could enter, but this would technically be a lotto because the RSI could still keep opening up and going back down. But as soon as the RSI starts to curl back inside the bands, that's when the move back up is going to start to slowly happen. And this move just happened to happen really quick. In the next two candles, we recovered the whole dump. And then you can see we get above median, we hold median, and we just get this whole chop fest here. Then we get our next falling wedge. And yeah. And so rising wedge, falling wedge. Does that make sense, guys? Our next pattern, let me look for it, will be a ascending triangle. Where is it at? Let's look. Oh. Look for our next setup that we like to take. Yeah, so that's why how do you manage setups that happen overnight, or do you just enter and watch during pre-market? I never really swing overnight. I'm not, some people do, but I'll just enter in the morning because most of the time it takes until market open for the play to actually play out. And this will all make a lot more sense when we're actually trading live, because right now it really it's kind of confusing because the RSI is just stagnant. It's not actually moving. But
right off rip, if you just look off RSI, you could tell where price action would go. Right here, we had a bearish divergence right here, and you would have been able to catch this dump right here just off this bearish divergence. And then once this bearish divergence played out, now we have our bullish divergence with the reset giving us room back up. And you can see we went higher this time than we previously were on this reset. So it's just RSI resetting over and over again until we finally get our break above. And the reason why we're getting our break above here is because the 4 hour was bullish. Come to our 4 hour chart. Where is May 9th? Right here. You have your bullish divergence right here on the bigger time frame. Right here. And you can see after this, when we break this trend line, that's when we got our new all-time highs, and that's when we continue upwards. Oh, this was in June though. Let me go back to May. It was right about here. Okay. So we had our bullish divergence here as well. Let me erase my drawings real quick. This shit's kind of in the way. So we had our bullish divergence right here. And we get our break above. And then we get a reset right here. You guys see how price stayed higher, but the RSI came back down to the bottom of the band? Look at where price is here when we're topping out compared to where price is here when we're at the bottom of the band. Do you guys understand how a reset works? Bearish versus bullish? What do you mean, Kuyo? Bearish divergence or bullish divergence? What do you just mean generally speaking? So when you want to, okay, I'm kind of confused. Could you unmute your mic, Kuyo, so we can chat? This is why I like to have you guys inside the call too, so I can fully understand your question, if possible.
Yo. Is
Yep.
my mic working?
Yep.
Because I always been seeing, bearish and bullish divergence. I want to I don't know if I'm overthinking it or anything, but like what do they mean, or what do they look like?
So to put it into the simplest way possible, it's just a trend. So a bullish divergence would basically mean the RSI heading back down towards the bottom of the band, making a trend downwards. So right now we're technically on NQ. This is kind of a bullish divergence right here. I'll look for longs this is the 5 minute. I don't know how the bigger time frame picture looks, but off the 5 minute, we already have some divergence forming right here. It's just basically a trend line on the way down to the bottom of the band. But you can see the bands are opening up. You guys see how since it's curling up, it could keep heading back down. So this is how the bands look curling up. And they could also curl in. When they're curling in, it's tightening up for a big move up or down depending on where the RSI and price action is.
Got it. So that one, you said that one was bearish, and then bullish is opposite?
No, this one is bullish. So
Oh,
this
that was bullish.
this confuses a lot of people because even though it's going down, it's bullish.
Got it.
Because it's forming. What would happen in a scenario is it'll chop here, right? Retest it again, touch the bottom of the band, and then break out all the way back to the top of the band right here. This is the move you're trying to play. You're trying to play the breakout right here of the RSI to the top of the band. And if we go to our 15, gotta get off that real quick. So if we go to the 15, we're also approaching the bottom of the band right here. but we are below the band. So the Bollinger Bands could keep opening up for more room down, or it could bounce. So what I would look for realistically in this scenario is for a push back above the Bollinger Band. So I want RSI to curl back up, break above this trend line, and then continuation up to the top of the band. Does that make sense?
Yo,
And then, so if you look at, like, if you just scroll back towards the RSI, it's literally just repetitive process of bullish divergences, bearish divergences. Like this was a bearish divergence right here, and you didn't get much of a move because this was just pure chop. Sometimes this will happen. It'll just be resetting over and over again for slow move up or slow move down. And this was also after hours, and since today market was closed, there was not much movement. So it is the best time to learn the strategy the real way is during market hours, during actual New York, like when New York is open. So we'll take, for example, Monday was right here. Where was open? I hate how this chart's 24 hours because that would 6:30 be the open? Right here.
yo,
Okay. So this was news related. So you'd be able to catch, you would have been able to catch the bottom of this off the 5-minute. You see where price point is literally at the bottom right here, and then our side's at the bottom, and then we have the bullish divergence right here. Does that make sense?
mm-hmm.
And there also is technically a trend line. It's not the greatest trend line. Trend line would be like right about here. And then when we break the trend line, we get our continuation until a certain spot of rejection. And then even then, when we reject it here, we have another trend line right here. Then we break this trend line, continuation. It's literally just a game of trend lines and divergences. The only time, that's why I tell you guys, like, this strategy is, there's like no way you can't end up profitable long term because you're just playing the breaks of these divergences and trend lines. The only way things can go wrong is if you're entering at bad points. You have to have good entries. Oh, are people typing in chat?
So basically, when you make that trend line, how do you know that it's gonna go that way and that it's not just gonna eat more shit?
So that's where you can be wrong. So it's a funny joke. Like the people call it the rising wedge that keeps rising, right? So this could just keep rising, and technically speaking, that's true. This could just keep going up, and it could be the falling wedge that keeps falling. But that's where your edge comes in handy. This is where the RSI comes in helpful, because you can see people could have been trying to short this off this break right here, right? But the RSI is still not fully at the top of the band. You want to enter when the RSI is at the top of the band and when the breakthrough is happening. Because right here on this trend line, if we come to our RSI and draw our divergence, hold on, let me move it up. Okay, so we draw our divergence right here. Our real divergence is right here, right? This is the bigger picture you want to play. Because if you played it, you can't play it right here. There's no real entry. This is just the rising wedge fully forming, and when the divergence fully forms right here, this is a good divergence. This is where you would start looking for your entry right here. You can see we touched the top of the band, and then we kept making higher highs on the RSI, and then price action as well. So this would be a tricky one because the RSI was opened up a bit more, but you could literally wait for the RSI to crack the trend line, and then you would enter off this right here, this 5-minute candle.
So would you not want to enter at that point where it's like right at the bottom?
What do you
Like
mean?
right where you put that line,
Here?
right at that point right there. Yeah.
You could play longs, correct?
Like,
but
yeah, you could play longs, and then
but that would
when
be
it
this.
go-
That would be
hits
this.
the top
That would
of
be
the
this
band.
falling wedge. If we're looking at this,
Okay.
this would be this falling wedge because it was this touch at the bottom of the band was this basically resetting. This previous price action, where there was somewhat. There was no real setup here. There was like, technically speaking, there was no real setup here. For this price action, there was no setup. I would not trade that.
Okay. And then it goes above the Bellinger Band at the top. So then at that point, why don't you play shorts?
Here?
Obviously, it showed that it kept being choppy and then it shot back up. But like, what
Okay.
would make you not think that?
So even if you did, you could have played shorts off the first touch of the right here. This trend line is just not as good, but you would have been able to play shorts here. Say you would have just took it just because it hit the top of the band and there's bearish divergence, because there was, right? You would have been able to catch this candle right here, which would have been not much, because this looks like after hours price action. It would have been like 20 points. You would have been able to catch 20 points. And you can see we hold median though. So anything above median is bullish. When it's above median, it means price action is bullish. When it goes below median, it means that it's flipping bearish. So even though we got this move down, we're still overall bullish because we didn't crack median and close under. That's why anytime you take a trade off median, it's technically a lotto, because it could just bounce off median and retest the top of the band or the bottom of the band. Your big moves happen when it cracks median and goes all the way to the bottom of the band. These are the moves you want to catch. But say I enter here, I would have entered this rising wedge right here. We enter off this break. You would have been trimming right about here, around this area on this candle, because we're at median and it could just reject and retest the top of the band. But we crack it, and then you'd look to close when we're at the bottom of the band. And you can see when we bottom out. And right now, it doesn't make sense, because you see how this wick happened, but the RSI is not at the bottom of the band? In real time, the RSI would have hit the bottom of the band and bounced back. But since the candle didn't close under here on the RSI, it doesn't look like it touched the bottom of the band, but when in reality it did. It always touches the bottom of the band before bouncing on these types of plays. And all of this will make sense when the market is actually open and you guys see it live. And then, I mean,
Yo, how many contracts do you use?
that depends. That depends on a lot of things.
For sure.
Right now, mainly gonna we still got a lot to go. I'm not gonna lie. We gotta talk about the whole psychology of trading and the mental aspect of it, because that's legit where like 95% of people fail. But this is just the chart. The charts are easy. This is easy. Doing all this is easy. Like, it literally requires no skill. Like, you literally just have to spot one of these, draw your line, and then enter on the break. But knowing when to do it and not when to do it is a different story, if that makes sense. I feel like ICT right now in his fucking YouTube videos just yapping for 2 hours, bro. Okay, are you guys still alive? Referring to RSIs, do you pay more attention to them on the 5-minute time frames? So I like the 5-minute and the 1-minute, because that's where you'll catch your scalps. But the 15-minute will always tell you the bigger picture. The 15-minute will always tell you whether we're gonna be bullish or bearish. Because let me find an example on the 1-minute. It's kind of hard when it's not live. But so say you play this bearish divergence on the 1-minute right here. Price action would have topped out right here, and you would have caught a, what is that? That's like a 10-point move. That shit's ass off the 1-minute. But sometimes when the market's more volatile, the 1-minute will come in clutch, because you'll be able to catch better moves. But the 1-minute just is literally for scalps, and you use the 1-minute to look for entries on the 5-minute and the 15-minute. All these come together. You look at all of them. I look at all the time frames when I'm actually trading. And then another part of the strategy is here. Okay, next part of the RSI is you can actually draw levels on the RSI. There is, and what I mean by that is, look, okay, so if we come to RSI, we notice something. The RSI always bounces at certain points. Right here, it's 1 point. Where does it usually top out? Right here. And then right about here. And then
look for our spots right about here. And how the RSI levels work is it's the same way as actual stock price works. They'll just typically bounce off this level or hold this level. And this only comes in handy for the bigger time frame pictures. This comes in handy for the 4 hour and 1 hour because it moves a lot slower when it comes to bigger time frame pictures. So we'll probably stay in this zone, and then when it cracks this, we'll get our move down on the RSI. I don't use this too much, but it is a part of the strategy. This is helpful on the bigger time frame pictures, but this is not something you want to look at too often because they just serve as trim and exit points. And then what else do we have for the strategy? Price action. Okay, so on the reason why I had you guys fill out that form was because I wanted to see what you guys understood and what you guys didn't understand. And a lot of you guys understand what price action means to an extent, but not what I mean by it, if that makes sense. Okay. So price action is literally technically just the way the stock price moves. But the way people trade strictly off price action are things called lower highs, higher lows, lower lows, and higher lows. So there's 4 of them. Make sure to write these down because these guys serve as the way you enter trades, and this is how you'll know if you're in the right trade. This is how you'll find continuation inside a trade. Let me find an example here somewhere. There was a perfect example. Kuyo, do you remember that one day where I was looking at shorts and I was short, but the candle didn't close on the 15-minute, and then we reversed onto all-time highs? Do you remember what day that was? I'm going to use that as an example here. That was last Tuesday, I think. All right. Okay. I can't really seem to find it because I think it might be this one. Let's see. Okay, perfect. Right here. This is a good example right here. Okay. So right here we were trading at this level, right? And you technically, there's 2 options you can do here. You could go long off this support or you could go short off this support. And you can see we were chopping right at it. We make a lower low. So technically speaking, on the bigger time frame, we make a lower low, but we don't close under. We never closed under. We closed right at it a couple of times, like 10 points within it, but that's not a full on out close. And you can see that we end up making a higher high right here above this candle. This was the previous higher high we had on the day, and then we make a new higher high after trying to make a lower low on today's price action. And when we make a higher high and close above it, you can see that we get our continuation upwards. This was a failure to go lower. This was a failure to go lower on this day. If this candle would have closed down here, it would have easily continued all the way down to here. But since this candle did not close here, we did not get the move down. And if we go on the 5-minute, the first 5-minute candle, I believe, closed under. If I'm correct, let's see. Because I remember trading this. It was this day, right? Monday. Was it this day? Yeah, it was this day. Okay. Okay, so 808, are you in here? 808, are you in here? On another chart, you had already posted your copy paste trading chart. And what option is it? Already posted. So I was trading with 808 when this happened, and I had told.
You're talking about?
Yeah, okay, so we were trading this. I traded this, and the reason why you would have went long. Hold up, keep me your mic, Kato. Shit's irritating.
Right.
Okay, so
this was failure to go lower. Because on the 5 minute, yeah, you could have chased shorts here. You could have chased shorts the second we closed under, and you would have caught your move. But this is where chasing plays. Chasing plays is a way of trading. You could have caught this move. You could have. Everyone, I don't know how to explain it, but everyone can be right. You can be right long and short. Because technically speaking, we did close under on the 5. But the bigger time frame picture was bullish on this day. So you could be short, but you have to know when to be short and when to exit. Because I was short on that, but I missed the longs because I didn't enter in time. But fuck, dude, this chart's pissing me off. Why does it keep moving? I keep losing. Where was I on Monday? Okay, where's Monday? Right here, right? No, it's not here. Keep losing it. Where was it? Okay, it was right here, right? No. Well, I lost it. I don't even know where it went. Okay, it was right here. Okay, there we go. Monday, June 17th. Okay, June 17th. Okay, so on the 15, we didn't close under, but on the 5 we did. So you could have scalped it on the 5, but the bigger time frame picture was still bullish right here. You can see we wicked it. We never closed under on the 15. And then we reclaimed the higher high and continued higher. So how you would play this on the RSI as well, on the 15 we were bottoming out. I was trying to go long on this because the bigger time frame picture was longs here. We're at the bottom of the band. And when we touch this lower low, the RSI was going higher as well, even though price action was going lower. So then we get our continuation upwards. We get our bullish divergence playing out here, as you guys can see right here. And then we have our other confirmation with the higher high here and closing above. The second you saw this close above, you kind of knew you were gonna head up. And then when this candle happened, this was just the fuck you candle. This was the bullish candle over here, and you could just play continuation after continuation. And then that's how we got to where we are today. And then on the 5 minute was right here. So you could have scalped this short on the close under, and you would have been able to catch a nice 650 point move. And on the 5 minute you were bottoming out. So this would have been your trim, and then you could flip long. Let me find another example of higher highs and lower lows. So here is, let's see, is this a good example here? No. Okay, I can't find another good example here. But those lower lows, higher lows, all that will come in very handy when trading, because that will tell you when continuation will happen. That will tell you when price action will head higher or lower, and that's how you catch your breakouts and your chases. Because chasing is it's a risky way to trade, but it's very profitable. A thing people get wrong is people say okay, so sell high, buy higher. I don't know if that makes sense. And buy high, sell higher. Some people are scared to buy because they think they're buying the top, but there is more continuation because there is more room up. And people tend to try to short
Like people would go short right here, trying to play this double top, right? But the bigger time frame move is higher up because there's room on the RSI and price action is going higher. People would try to short here just because this was our previous high, and this is where people get baked. This is where people would have got absolutely destroyed on this pump up. When in reality, you should just play the trend. The trend is your friend. You never go against it. The trend here was going higher, even though we could have easily topped out. So you just got to look at the bigger time frame picture, and the RSI would have painted this picture as well. We got bullish divergence on the 15, even though we're at this previous high, we have bullish divergence forming here. We get the break above, and then we got a big move up. A lot of this doesn't make sense right now, though. I know a lot of you guys are probably confused. The basics of it make sense, but when you see it in live, would that be considered scalping? Yes, that would be considered scalping. A lot of this will make sense when we actually trade live, but that's the basics of the trading, of the actual strategy itself. The next thing we will be learning will be risk management and how to size and how to trim and exit. But I mean, I've been yapping for almost 2 fucking hours right now, so I think that will be the next lesson, and we will live trade in the next lesson. But if you guys have any questions about how the concept of the strategy, let me know before we head out. It's a pretty simple strategy. It's nothing unique. It's literally just playing trend lines.
Can you show the Can you show the specifics to your indicators,
Yes. You
like
mean
your
like
settings on them?
yes. So for which one? For RSI?
All of them.
Okay, so for VWAP, it's just literally normal VWAP. There's like only one VWAP you can pick from. And VWAP is just, it stands for volume weighted average price. It's the average price of the day, and it just follows it as day goes on. And then trauma, the settings for trauma, the length is 32. The SRC is close. And then that's about it for that one. And then the RSI settings are, it's not letting me click on it. There we go. So time frame chart, RSI length 14, source close, MA type Bollinger Bands, MA length 34, and standard deviation at 2. And I'll send you guys all a link of my chart so you guys can copy it and use it. But this is the basics of the strategy. There's a lot. It seems pretty simple, but when real price action happens in real time, it's a lot more difficult. So I'll help you guys identify when to enter and when not to enter, because the Bollinger Bands are always moving. They don't stand still like this in real time. They're moving up or down or closing in, and that tells you a lot of the picture of where price action will go. Because if they keep opening up on the 1 minute or the 5 minute, that means more room up. If they're tightening up, that means there's low volume and a big move is coming. But I mean, tomorrow is Thursday. I'll text in the group chat, see when people are free. Time to go full for my next trade. Okay, and looking at today's data, the RSI looks bullish and it's at the bottom, reaching the previous lower level candle. Is this the one where it'll bounce off? That was last Tuesday, I think. Okay, so right now, off this data, if I were to look at it, the 5 minute looks bullish, technically speaking. The 15 also does, as long as this RSI comes back above. And then we also look at our bigger time frame pictures, the 1 hour. So the 1 hour is actually slightly bearish, but it's approaching the bottom of the band. So I would technically wait for the hourly to reset on this bottom of the band, which will probably be soon. And then the 4 hour is also actually technically bullish, but it might reset before getting our next leg up. So right now, from the RSI itself, everything does look bullish, but there is slight room down before we get our next leg up. And you can see that the RSI went higher than previously and the price is higher. So this is the 4 hours literally just resetting again for the next move up. And that's what the RSI will literally keep doing until the trend flips. But if you guys have any more questions before we head out, just let me know. The 15, the 5, and the 1 minute are the main way I take my trades, by the way. And I would appreciate some feedback from you guys. What would make these lessons better? What would make these lessons more easier to understand? Am I talking too fast? Am I not explaining things too well? You know, just let me know in the chat. When are you going to do live trading? That will be decided inside the group chat. I will ask everyone when they're free and see. I think we just need some server boost so the stream quality rises tremendously. Yeah, I think live trading will help. Okay, everything's pretty solid. The live trading will help when time comes.
Hey, Crispy,
What's up, bro?
can you show me how to do the candle shorting? How you read the candle in order for you to do the thread lines?
Say that again.
The individual candles. You know
Oh,
how you read the candle,
oh,
and then you
okay.
see like the top and then the lows. Yeah.
Yeah, okay. So this is the top wick, right?
Mm.
This is the bottom wick. And then this is the candle open. And this is the candle close.
That's cool. Thank you.
That's what you were asking, right?
Yeah, thank you.
For sure. And that applies to every time frame. Okay. Okay, so live trading. It looks like you guys want live trading. All right, for sure, for sure. All right, any more questions? Any more questions? And I don't expect you guys to understand everything fully right now, as it is the first time I am introducing you guys to this. I know you guys have heard me talk about it in the past when I tell you, oh, there's bullish divergence or bearish. But I'll try to explain it more as time goes on. Can you post this video soon? Which prop firms would you recommend? So the prop firm I would recommend is My Funded Futures. And I would recommend going with the expert account. Will you be doing mobile as well or only desktop? What do you mean by that, Jesse? They offer 50K account for, it's like 132 after the discount. Profit goal is 4K and you have max drawdown of 2K. The way the drawdown works is it's end of day, so whatever your account closes at end of day, your max drawdown is 2K from the end of day close. Apex is trailing, so I would recommend My Funded Futures over Apex, even though the accounts are a bit more pricey. There is no activation fee for this account as well, and there's no daily loss limit. Will you be doing mobile as well or only desktop? Mobile for TradingView. Jesse, I prefer trading on desktop. I would recommend everyone to trade on desktop. You can trade on phones, but it is 10 times easier on desktop in my opinion. You could see everything better. But I do trade on my phone occasionally, but anytime I do live trading, it will be on desktop. Just because it's easier for everyone to see the charts and stuff. What's the difference between trailing? So trailing is when so say you're in a position, you're in NQ longs, and you're up $200, but then price comes back down to break even. And then you close for break even, but you were up $200 at one point. Even though you were up $200 and didn't close for $200 profit, your max drawdown will be applied from that high water mark. So $52,200 will be what your account technically was the highest ever at. And it'll follow you from the highest point until you make above the trailing drawdown, which is $2,500, I believe, on Apex. So until you make $2,500, it will follow you even though you don't close your trade at that specific point. Yeah, exactly. They're basically crippling you by doing that. It just makes trading a lot harder when firms do that. And My Funded Futures does not do that, so it's a lot more helpful. So after you hit your max drawdown, that's when you reset. But say you're trading on Apex and you make $2,000, or you're up $2,000, but you don't close for $2,000, and your trade comes back down to, let's say, break even. You would be liquidated even though you're still at 50K. But say on My Funded Futures, you make $2,000 and you don't close and it comes back to 50K and then you close, you will still have $2,000 worth to draw down to 48K even though you didn't close. Because ATF not letting me access my account assuming I hit the trailing. That could be an issue. I would just check your email or ask them if you got liquidated for my. I read it wrong, but the first 10K is yours. Then that is correct, Kuyo. And picking the right firm is actually will determine a lot in your trading success, because some people will be able to succeed on my funded futures, but they won't be able to succeed on Apex. I personally like my funded futures a lot better than Apex, and I don't think I would see as much success as I do right now if I was trading on Apex. My funded futures is max position. Does that mean you can only take 10 trades? No. So max position is 5 contracts. That you have unlimited trades. You can take a million trades if you felt like it. 5 contracts. How it works is there's minis and micros. How it works is for every mini, there's 10 micros inside a mini. So micros are the smaller sizing for futures, and minis are the bigger sizing. For one mini, every 10-point move is $200. So every dollar is $20, I believe. If I did that, yeah, $20. Every dollar is $20 if you size with one mini. I believe I did the math right. Yeah, 1 point equals $20, which is a lot. So when you think about it, if you size with one mini on a My Funded Futures account, all you need is a 100-point move and you're funded, right? Wait, no. 200 points and you're funded, I believe. Because 100 times 200, yeah, 200 points and you're funded. And you could get that in one good trading day, realistically. Prop firms have single-handedly, they have sped the learning curve by more than 90%. Back then, you would need to actually invest your own money and learn with your own money, and you would lose a ton before actually seeing success. But with prop firms, for $132, you have access to 50K in capital. So the learning curve is very, very cut down with prop firms. Once you reach your goal, is it difficult to transition to the funded account? No. So typically, once you get funded, they send it to you the next day, and then it's the same rules, same everything. It works the same exact way. The only thing on funded accounts, you cannot trade news. You can't be in a position 2 minutes before certain news comes out. If we come on here, I believe it's on here. We go to tier 1 news. You can't trade any of this news. It tells you what news you can't trade. So as long as you're not in any of this news, you will not have any problems. Does MFF have a DC? Nope. They have no scaling rules, no nothing. And the DCA rule is a rule some firms don't allow. It's basically averaging into a position. Like Apex no longer allows traders to average into a position, which I like. That's pretty dumb. But My Funded Futures, you're able to average into a position. All right. If you guys have any more questions about strategy, anything, I might have missed some stuff. I'm not gonna lie. So if I missed something, just let me know. But all the stuff I just told you guys does transition into normal stocks. Like, for example, this is Tesla. If we go here, we do have some bearish divergence technically forming now. We wait for it to hit the top of the band. The bands are opening up, so it's giving it more room up. We also have this little trend line. Rising wedge we had right here. With the bearish divergence right here. You would have been able to catch this dump right here. And then when the RSI finally decided to bottom out right here, you would see that's where we bounced. And we've just been consolidating right here.
Yeah, the RSI on top of having your support resistance levels does come in handy. Yeah, the RSI with Bollinger Bands, people use it a different way, but the way I use it is different. And the thing is, if you look up videos like on YouTube, there's like probably I think like maybe one full video on this strategy. Like nobody talks about this. It's a very very slept on strategy. One thing I didn't mention that I did forget to mention is talking about pre-market lows and pre-market highs. So next lesson I will mention that. But pre-market lows and pre-market highs will be a very big big thing when we're trading as well, because those levels are respected very highly when market opens. So say this was like a pre-market low and then we retest it, we're more than likely going to bounce. But if we do crack that pre-market low, then we're probably going to flush. There was a day on a Friday, I think it was like 2 weeks ago. Let me see if I can find it. Where as soon as we broke that pre-market low, we dumped like 200 points. Let's see, what's this? Thursday 13, Thursday 14. It might. So this. Let's see, what time was this? 9:24. I don't know if this was a pre-market low, but technically it'll look something like this, where we bounce off the pre-market low, or where we reject off the pre-market high. Just another way to find a nice little supply and demand level off those pre-market highs and lows. You got fan art in the group chat. Let's see. Yo, Simus, what the fuck? That's funny. Alright, yo. I think that's about it. I'll give you guys a couple more seconds to ask any questions. The live trading will help you guys see this a lot better, though, for surely. It's different between just hearing it and seeing it live, so it'll make a lot more sense. Yep, appreciate you all for joining. I know this is pretty long, probably longer than expected, but